QuickBooks Pro Desktop 2021, receive payment, transaction, and form. Let's get into it with Intuit. QuickBooks Pro Desktop 2021. Here we are in our Get Great Guitars homepage practice file. We currently have the Open Windows open. You can open the Open Windows by going to the View dropdown and the Open Windows list. We're now going to be recording a receive payment form. So last time we entered the invoice, that's going to be part of the process of our flowchart for the customer cycle. The invoice will be something that we will record if we are billing the client and we're not receiving payment at the same point in time. If we were receiving payment at the same point in time, we would have gone over here to the sales receipt, which you could think of as like the thing you would do if you're at like a cash register and you got paid at the point in time of the sale. Here, accounts receivable went up, and the other side went to sales. So we record the sale here. Next, what's going to happen is we're going to receive a payment. We're expecting to receive payment in the mail. There's a standard form for that within QuickBooks, which of course is the receive payment form. So we're imagining here we sent out the invoice last time. We expect now to receive the payment. We're imagining a check coming in the mail, and we're going to be picking up that check. Now, of course, you could think of other types of receive payment forms, but the process would basically be the same. We're going to send out the invoice, expect to be paid later. Then once we have been paid, we will record the receive payment. Now, the tricky thing here, the thing that gets many people in problems, is the fact that the receive payment form, even though we're getting cash, let's imagine we're getting like a check at this point in time, it's not really in the checking account. And if you were to do like normal financial accounting, like like learning accounting transactions, there would typically be a transaction. You would debit cash or you would increase cash when you got the check. But in practice, of course, we have this distinction that it hasn't really got to the checking account yet. So once we got the check in our hand, it's not really in the bank yet. That's important because once we put it into the bank, then the bank's going to group those checks in the format that we deposit them in. So if we give them multiple checks, for example, and tell them to deposit it at one point in time in one lump sum, they might combine the checks together. Or if we have a bunch of cash transactions that we had during the day and we take them to the bank at the end of the day, they're going to record the cash transactions not as individual transactions, but as one lump sum. Why does that matter? Because we're going to try to tie out in a bank reconciliation our books to the bank books. And if our books have the grouping of our cash deposits different than they will be reflected on the bank statement, that's going to cause us problems. Therefore, there's typically an intermediate step here, which we're going to use undeposited funds to have a holding account where we'll increase undeposited funds, which is something that people get messed up, that messes people up kind of a lot. And then we'll take it out of undeposited funds when we record the deposit. Now, note, you don't always need to do that because, if you only get checks and you just record one check at a time and you deposit it into your bank as soon as you get it, or you get electronic payments and they line up exactly to what the deposits are, then you can go right from the invoice to depositing into your bank account. But if you get a situation where you have cash transactions or transactions that are going to be grouped in some way, shape, or form different than the format that you will be receiving them in terms of amount, then you might want to use the default setting here, which is to go through that undeposited funds. Let's take a look at the forms and consider what will happen with the forms. Remember, every time we enter a transaction, we want to think about the financial statements, what's going to happen to the financial statements, then enter the form, think about what's going to happen to the financial statements, and then double check them. So we'll go to the financial statements, reports, company and financial. We'll take a look at the balance sheet. So balance sheet report, I'm going to be then changing the dates in the customized reports, upper left, changing them from 01/01/21 to 12/31/21. January through December 2021, and okay. So now we're gonna be receiving money, and we can assume it as a check or some other kind of payment. Cash doesn't really matter. The point is we're getting money, right? But it's not yet in the checking account. So typically we will put it into a holding account that's going to be undeposited funds. There's no undeposited funds here at this point in time because we haven't recorded anything to it yet. But once we record to it, it'll populate here. And it'll be an other current asset. It's really kind of a cash type of account, but QuickBooks doesn't want to set it up as a cash type of account because they have different qualities to it. So they set it up as an other current asset typically. And then the other side is going to be decreasing the accounts payable. So the accounts payable then is going to be decreasing. We'll also see that in the report, the detail report. If I go to the reports up top and I go to the accounts receivable detail report, and we're going to be receiving a payment, for example, I don't think that's the one. Let's do it one more time. Reports, customers and receivable, not the aging, but the customer balance detail. And we're going to be looking at Anderson. So they're going to be paying us, I believe, this $5,000, this top one here. So it'll be reflected as they have paid us on this sub report as well. So let's go ahead and do it. We're going to go to the home tab. We're going to be saying we got a payment. We're going to receive payment on this. And then we're going to go through our process. We got the payment from Anderson. So I'm going to say Anderson. I could hit the drop down, or I could simply start typing it in there. Anderson. Also note that if you're thinking about using bank feeds, the fact that you're going to be tracking through the accounts receivable, if you're using accounts receivable, that could be something that could be a problem with the bank feeds. Because if you're just trying to record the transactions from the bank feed, you're waiting until it hits the bank. So if you have to do something like track the accounts receivable, that of course is something that's happening before it hits the bank. So just be careful if you're using bank feeds and you're using the receivables. You got to take into consider how the bank feeds are going to fit into your full accounting system. If you just have a cash basis system, you're not recording any revenue until it hits the bank, then you don't have to worry about it. But if you're doing something to receivables like we're doing here, this process, then you have to take that into consideration with the bank feeds. So we're going to be receiving, note down here, it then shows the two invoices that have been sent out. Now this first one was an opening balance invoice. The second one is the one we just made. So we're going to select the first one, that 5,000, and I'm going to say if you do not enter amount received, so I'm going to say okay. It's basically saying, look, I populated this amount up top in the amount received. So instead of me typing that in there, I clicked this number and it populated it for me. If we got some payment other than the full 5,000 and we're applying it to this invoice, then, we'd put something lower than 5,000 and we would still have an outstanding balance. In other words, if this was like 4,000 that we got paid for that invoice, then we'd still have an amount due, right? The amount due was 5,000, the amount applied 4,000, and we'd still have the amount outstanding. So I'm going to bring this back up to 5,000 here. And so there we have it. Then we could select a payment type, and this won't change any of the transactions, basically for informational type purposes. But if you say cash, then there's nothing more to do really. You got cash, right? If you say a check, then you could add the check number of the check that you received. Could give you a little bit more detail. The credit card information here, and then the e-check information, which you might have the reference number as well. Let's say a check. We could put more information for the check number if that was indeed the case. What's going to happen when we record this? Once again, and notice the terminology is a little bit different when we went into it. They call it a receive payment form. And then when you actually go into the form, it's called a customer payment form. And we'll also see what the link looks like when we get into the detail in the financial statements. So just be aware that little difference in terms of when you go into the form and receive payment, and then the name of the form, customer payment. But the receive payment or customer payment form will then be decreasing the receivables. That's the point of the form. It's going to decrease the receivables. The other side, we have it going to the default, and that's going to be the undeposited funds account. And if you wanted to change that, note if you went up top and go to edit, we went down to preferences, and we saw that we had the payments section and the company preferences. This use undeposited funds as the default deposit to account is going to be that, because that's selected, that's going to be the default. It's going to go through the undeposited funds account then. So let's record this. I'm going to go ahead and record it, and then we'll take a look at it. I'm going to close this out. We're going to go to the balance sheet, and we see then the undeposited funds. There's the undeposited funds showed up in the other current assets account. Now remember, that's basically a cash account. If you have something in undeposited funds, that indicates that you're holding on to cash that you haven't gone to the bank yet with. So if you have something in undeposited funds and you don't have cash that you're holding on to, then something's probably wrong. And again, that's an area where a lot of things get kind of messed up. So if I go into the payments, there it is. If I double click on it, then it's going to be taking us back to that customer payment, closing this back out. And also note that here it's indicated as customer payment. Right, so we've seen kind of three names for this thing. If you go to the home tab, this form is called receive payments. If you actually go into the form, if I go into the form, it's called it'll be called customer payment. And then if you look at the reference within here, it's just called payment. So those things can be a little bit confusing, but you want to be able to tie that down because the type of the form will allow you to understand basically what is going on if you know what those forms are doing just in general. Back to the balance sheet. Then the other side of this is going to go to the accounts receivable. Accounts receivable is now going down. So there it is, the 5,000 decreasing for the receivable, and then back to this form. Closing this back out, closing this back out. We also know that the customer balance detail report has now been going down for Anderson here. And now we're down to the receivables of the $16,319. If I go back to the balance sheet, then that should be the amount that is now on the balance sheet for the receivables. Okay, so we're going to do this again. It's going to be a receive payment. So what's it going to do? It's going to decrease the accounts receivable. It's going to increase undeposited funds. And then we're going to deposit those undeposited funds at a future time to the bank in the same grouping that we expect them to be seen on the books as in the bank side of things when we receive the bank statement. So let's go back to the home page. Let's then go to the receive payment. This is going to be from Jones Guitars. So drop down, or you could type in Jones Guitars, and we could say that this is a check or some kind of e-payment possibly. And I'm going to say that this is going to be for $7,500. So we'll say, and let's make this on the 16th. Let's make this 16th. And so notice we have two invoices down here. So this was the beginning balance invoice that we set up when we first started. And then we had this second invoice that we created. We're checking off that first one, which populates the amount of that $7,500. So we're paying off the full amount, and therefore there's nothing will be due for that particular invoice. The other one will still be there. And so that's going to be it. Notice we have this is called now a customer payment. What's it going to do? It's going to decrease the receivable. That's what a customer payment will do. And then the other side is going to go to undeposited funds because we have the default setting to go there. So I'm going to say, let's save and close this. And then let's go back to the balance sheet. And we're going to say, all right, so now the undeposited funds are at the $12,500. And so there we have it for those two items. Also note that I recorded that second one as an electronic payment. That one would probably go right to the bank if it were an electronic payment. So, but we're still going to group these, so don't let that throw you off. We're going to group these in a fashion when we go to the deposit screen and group them together. And we might not group together, the check and the electronic payment in practice probably wouldn't be grouped together. But if you had cash that you were going to go and deposit, it might be. If you had multiple checks that you went and deposited, then those could be grouped together. So I'm going to close this back out. And then, so that's an undeposited fund. So we're imagining now that we have this money in some way, shape, or form that we're then going to, it's not in the checking account, that we're then going to deposit into the checking account. So we're actually going to go to the bank. Now, if it was cash, you would assume you had the cash, you'd go on over to the bank, deposit it, and it would be in that lump sum that you would deposit. The point being that this account is helping you to then group the deposits in the same way that they will be seen on the bank statement. Okay, so that's going to be the undeposited funds, and then the accounts receivable, double clicking on it, it has gone down now for Jones Guitars, closing that back out. We're now at the $8,819. If I go to the customer balance detail, we see Jones Guitars has been paid off. This is the standard kind of thing you would expect to see. We have an invoice, and then we paid the invoice. That's what you expect to see in like the accounts receivable detail. Right, here's we invoice and then we got paid. So it should go up and down. And we see that up here, of course, as well. Our total is now at that $8,819, which is also the amount on the balance sheet. So we're going to do it again. I'm going to go back to the to the home page, and I'm going to say receive payment. Also note that you have the two deposits showing up here, indicating that there's two items that should be included that you need to go to the bank for. I'm going to go to the receive payment again, and I'm going to say this time this is Smith. So I'm going to say Smith Guitars, and there's the 8,000. I'm going to check out the 8,000. That's the one I want. So we'll pick that up. And I'm going to, don't show me this again. So I'm going to click that and say, oh, yes. And let's make this on the 16th. And then again, I'm going to make this one cash. Notice that these three things are just basically references that we'll have. It's not really changing the transaction at all. But if you choose cash, you can use the reference number, and you have different types of references that you can be using. In practice, of course, if you're getting cash, then you're more likely to want to use this undeposited funds. If you're getting checks and you deposit them one at a time, you may not need to go through the undeposited funds. You could just simply go right to the bank. If it's a credit card, you're going to have to group and figure out your groupings with the credit card company, and to figure out how those groupings of the receipts are going to be grouped in your bank statements. And then if it's an e-check, then most likely that's going straight to the bank. So again, you're going to have to figure out how you're going to link up then the receivables and the amounts that are being basically going to the bank. How are those being grouped so that you can group them together? Right here, the customer payment is going to be tying out the fact that you have received the payment, decreasing the receivables, and then the undeposited funds are going to be used to help us to group them. So let's hit save and close. And then I'm going to go back to the balance sheet, and once again, we should see the undeposited funds increasing. So we've got these 3 items that we need to go to the bank with in some way, shape, or form, or record them into the bank in the proper format. And then we have the receivables going down. So the receivables go down. And then if I go, we're at the 819. If I go to the customer balance detail, we see the 819 total. We see that 8,000 decreasing for the customer of Smith. Let's go back to the Home tab. The next thing we will do is deposit them. Here's the deposit screen. You can see 3 items. I won't deposit them now, but just check it out. If I click on the deposit screen, then we see these 3 items. We get this window that pops up. This allows us to group those deposits in the proper grouping in the format that we expect them to be seen on the bank statement, so that when we then reconcile to the bank statement, it'll be in our books in the same format as shown on the bank statement. I'm not going to record that. Going to close it back out. Going to take a look at the balance sheet. This is what we have thus far. So you can take a look at what we have thus far. The income statement was no change. Nothing happened to the income statement because we were just recording balance sheet accounts. The cash being received, one asset going up, the other asset going down. And then let's take a look at the trial balance reports. Accounting and taxes trial balance, changing the dates from 01/01/21 to 12/31/21. And you could see that a little bit easier to see if you're following along with the practice problem.